Hello, and welcome to a new episode from the Markets Middleman. Blessings for this new month. It's February, the second month of 2026, which had been starting up strongly. Without further ado, let's go into our analysis and forecast so we can prepare ahead for this upcoming week. Since we had a monthly close last week, um, I will start with the monthly time frame, which is suggesting something interesting. So, we've seen how the DXY was trapped within this range for a long time, since June. And yes, I couldn't see the month close below the sell side, so confirming fully the breakout of the range. However, we saw that January closed well below the low of December. Okay, so this can signal that potentially during February, January's low could be taken. But it's just a matter of a question where this scenario could take place. Of course, if we see this month violating um, January's high, then I think we will have more bullish. But from the structure and from what I see on the monthly time frame on other pairs as well, I think there's more downside for the DXY, and especially that it closed below the low. So I'm gonna stick for my bearish bias until further due. So this is the monthly time frame. Again, the target for February is to take January's low and potentially take this sell side as well, which was important since it was a previous buy side, sell side, monthly order block, and a fair value gap. So there's some pocket over here. There's some smart money pockets over here that need to be taken in case we saw this scenario playing out. Now moving forward into the weekly time frame, yes, I see a huge um, push to the upside, refusing to close below the sell side on the weekly time frame. But I don't really trust this push to the upside because it happened at the end of the month. So usually at the end of the month, big institutions start liquidating their portfolios and start the new month. So I'm not trusting that this is a fundamental push to the upside or a change in market structure or even a reversal. In fact, I think this is just a liquidation to cover some key areas of interest to continue lower. So I think this wick over here would potentially be priced in the upcoming this week or probably in the next couple of weeks. But as a point of interest, okay, especially this week was super bearish and it closed well below this weekly breaker. So I'm just keeping in mind that this area over here is a potential continuation to the downside. So this is the only thing I can take from the weekly. However, two things made me convinced to stay bearish. First is the monthly time frame closing below the low, and second is the daily time frame closing below the sell side. So I see over here that the day of Tuesday, January 27, closed well below the sell side. So the market structure shift, there's a change in character over this area, which signals for more downside, especially when we see market gap like this. Usually price tend to fill the gap and continue in the direction. We've seen something like this happening over here back in December 3 when market gapped lower, okay, then consolidated for few days, tested this gap over here and then continued lower. So it's not a guarantee that the same thing will happen, but yes, I think similar thing would happen over here. Now notice this weekly breaker block over here. This means that price could either take the gap and just go lower, or in case I see further manipulation into the weekly breaker, which is on the daily also looks like an interesting level to be taken. So this is the area that I'm watching. Of course, first point of interest is the gap. In case I see further manipulation, I'm not changing my bias until I see the reaction from the weekly breaker block. So with that being said, on the DXY, let's now, as usual, go and translate this into actual setups on the EU and GU. So also, the inverse of what happened in DXY in terms of the monthly close, we see clearly that January was actually able to close not only above the high of December, but above this monthly breaker, which had been trapped in since a long time. I usually ignore the wicks, okay? I sometimes I take the wicks in case of reversal. We'll talk about this later on. But when it comes to breakouts, I trust the closing basis. So this is the base point of this consolidation over here. And the fact that the month was able to close above the high and above the breaker signals that January high has high tendency to be taken. Now, I'm not anticipating a retracement back into the monthly breaker because this would violate a little bit the bullish structure on the daily. But anything can happen. Of course, this is the last point of defense for buyers before they take over and test um, January's high. So, moving forward into the daily time frame, I've spot this daily fair value gap from previous price action. It's from the past a little bit, but it's not something that would change the market structure. It's just an area that price would take a breath from after displacing strongly. Okay, this was the first initial move, and then price displaced strongly above this buy side, changing the character. So I'm still signaling, and yes, noticing that even though with this candle low, which was on Friday, again, I don't trust much such candles, especially at Fridays, because it's just liquidating profits before the new month is gonna start. So it's not changing the market structure, and it's not changing the overall situation. So I'm gonna stick to my bullish bias on EU. Now, if I'm already bullish, then I would be waiting for some key areas of interest in order for me to continue the overall trend. So I'm backed by the monthly, I'm backed by the daily levels. So right now, my job is simple. Identify a key point of interest that price would continue from. The first obvious point of interest is this daily fair value gap, which aligns perfectly with the breaker and another breaker from the past. But at the same time, if EU wanted to balance at least 25% of this daily fair value gap, then it would be testing a key point of interest. First, it's a previous daily breaker. Okay. Second, it's a 61 feeble level. Let me just make it a little bit more clear. Why I take the feeble level from here to here? Because this was the first wave. Okay, and this was second independent wave for the fact seeing a bearish day, and all of those are bullish days. So I spot my feeble level from this wave and not from this one, simply because this is the straight wave to the upside. So I have a 61 feeble level, and I have something very interesting on the hourly time frame. I want you to notice something very interesting occurred on the 2 hour time frame. So this is the daily fair value gap starting from here, okay? But within this daily fair value gap, this is the daily breaker block level, and just below the daily breaker block, this is the 2 hour fair value gap. If you watched a previous, my actually last forecast, I was waiting from this level over here. I was waiting this H2 fair value gap to be taken in an anticipation of a move to the upside. We were able to translate this into a GU trade, which I will show you later on, but EU, the structure was a little bit further than I wanted. So we translated this move into GU, and I said something that if price does not want or do not want to test this level and made a displacement higher, then I will have a breaker to work through. And this is exactly what happened, but price kept this 2 hour fair value gap until further due. So why this 2 hour fair value gap is important? It's important simply because it's aligning with a decent breaker. Okay, it's aligning within the 50% range of the daily fair value gap, and it's just below the 61 feeble level. So in case buyers and smart money buyers are gonna step in. This high must be protected. Okay, price must not take this high. Otherwise, it would signal that something is occurring and we could change the trend to the downside. But so far, I expect that a little bit of accumulation, further manipulation into the 2 hour fair value gap as an optimal point of interest, and then a continuation at least into this buy side, and optimally this buy side as well. Taking a trade at uh, the 2 hour fair value gap allows you to set your stop loss over here, okay, entering around this level and still collect 3 hour, 4 hour, even 6 hour until the buy side liquidity. So, but again, price is not guaranteed that it will test this level. So let's say price take this daily fair value gap and then displaced higher. It already created a nice breaker to retest and then continue to the upside. So if this happened before getting in at the 2 hour fair value gap, then I'll be looking into adding up over here. Just like what happened over here one time, then it offered us the second time. Just what happened over here, first displacement, offered a breaker on the small time frame. Same exactly what happened over here, creating a breaker, then moving to the upside. And last but not least, we saw this lately last week over here. So I expect either a displacement to the upside or offering me an optimal entry so that I can place my best order in terms of risk to reward and in terms of um, optimal entries and safe stop loss. So with that being said, on the EU, I don't think there's anything much to be said. Just notice something, or I would like to remind you guys, none of this is a financial advice, okay? And you should always be aware of the risk involved in trading. So this is just for educational purposes only, okay? So once the narrative is set from DXY and EU, my job on GU becomes simple. So GU was able to not only break above this buy side, but also closing a day, 2, 3 days, stayed above this buy side, confirming a strong change of character for the upside. It was already bullish right from this moment. Okay, it turned bullish, but also even on the higher time frame, price is still changing the market structure to the upside. This doesn't mean that I will be buying from here. No, in fact, I'm patient. Yes, I see this bullish daily fair value gap. This wasn't my point of interest simply because price was extended to the upside, and I expected a further continuation or a further retracement, sorry, to the downside. This is why I had nothing to do with this daily fair value gap. Yes, I see that it was inverted, okay, and today is a fact that it tested the inverse fair value gap. But again, this occurred at the last trading day of the month. This occurred at a Friday, so I'm not trusting that this is the real move. I want to believe that this is a manipulation that would continue during this week until we test the smart money levels. So again, I'm bullish, and if I'm bullish, my job becomes simpler by identifying an area of interest. So the most obvious area of interest is the daily fair value gap, okay, over here. And I had something from the past, this inverse, okay. Why I set this inverse fair value gap? Simply because price respected it and caused a retracement in price. That's why I expect price to trust it also on the upside. I'm not saying that we're gonna have a retest till here. In fact, this high must be protected. Price should not test this high if it needs to stay bullish. This is why I align this inverse fair value gap with this bullish fair value gap, creating a BPR on the daily time frame. Also, if I take a fib, again, my Fibo level is from this wave to this wave simply because I've seen first push to the upside, consolidation, bearish day, and then all of green candles, which indicates an independent wave from here. So my fib level is taken from this low to this high, and this is the 50% retracement. So again, 50% retrace, inverse daily fair value gap, which is a BPR, And all of this area is just a daily fair value gap, which I personally trust the most when it comes to daily levels. The daily time frame is king, whether you like it or not. And after you align your analysis with the daily time frame, then you can head into lower time frames. Talking about lower time frames, let's see. I've had this 8-hour fair value gap was creating during today. So I see price respecting it so far. So what I want to see from GU is the following. I want to see a further manipulation to the downside. Maybe GU can just test the daily fair value gap. Okay, no need to go lower. But I just spot those levels as a last point of defense and as an optimal entry. So what I want from GU is the following. I want a full retracement down, and I will talk about an H1 time frame point of interest, and then a continuation to the upside taking January's high. I want to tell you something about breaker blocks that I spoke about from EU's example, and this was our setup for last week. So we see how price clearly displaced higher, refusing to retrace any lower, and still did not reach the critical buy side over here. So within this breaker, okay, you could have entered at this breaker, protect your stop loss within this low, and target this buy side liquidity. So it was really a very obvious structure. And notice something also. This breaker and this breaker are at the same level. So there's no big difference between them. But notice on the closing basis, price never violated this breaker to the downside and never closed a 1 hour below it. So with the stop protected below this hourly fair value gap with an entry around these two breakers over here allowed you to take 3 hours over this first buy side and 4 or 5 hours about the next buy side. So again, we are seeing this repeating over and over again, and this is something really nice because you need to be consistent in your approach. Otherwise, every entry would look different than the other one, and this is not going to be consistent or valid for the long run. So one key area I want to spot inside this daily fair value gap is this 1 hour fair value gap. It happened during PM session on Friday, okay, before the last week of January. So it's really a key area. Why? Because it comes within an inverse daily fair value gap. So in case I've seen market creates a low and then dipped lower into the 1 hour time frame fair value gap, then I expect the reversal to occur from here. This could be said as something like Tuesday would take the low of Monday and then we see the reversal through Tuesday. But I mean, those markets are crazy and there's a lot of momentum in the market, so I'm not gonna be surprised if I see this happening during today. Maybe not right now, it's New York session, or during PM session tonight. So again, this was a little bit more detailed than my usual forecast, and yeah, it's exciting, honestly, to start this new month after having a great month in January. And again, patience, patience, patience. A lot of A plus setups will be developed during this month. Our job as traders is to just stay patient, wait for the market to tell us what we need to do, and just align our preparations with what's happening and price action. So thank you if you made it that far. I hope you enjoyed this forecast and you find some value in it. And I see you in the next